Good afternoon, everyone. Let me welcome you at the next online event organized by the Institute for Foreign Affairs and Trade. This is Viktor Eszterhai. I'm a senior research fellow at IFAT, and I will be the moderator of today's discussion. The title of today's event is The Space Race of Central Bank Issues Digital Currencies in Asia, and What Lessons Can Europe Learn? This occasion is the first in a series of events organized by the Asian section of the Institute of Foreign Affairs and Trade under the brand of the front lines of the global technology war. These events will be focused on the key aspects of digitalization in Asia, and which will be discussed by the best Hungarian and I'd also say the foreign experts in this field. Our first topic was inspired by the official debut, the digital renminbi during the Winter Olympics in Beijing. And this, I have to say, the first digital currency issued by an economic powerhouse. So, of course, this was covered by the media and the press during the Olympics, but I still think that this issue has not been covered enough depth. So there will be plenty to discuss for today. Secondly, the said events in Ukraine have brought digital payment solution into a spotlight in the recent days. Although our invited speakers today will not focus just only the digital currencies issued by central banks, but I think they can provide us great help to navigate in the new world emerging in front of our eyes. So I really hope their comprehensive overview of the digital payment solution and with a special focus of the digital currencies issued by a central bank will help us to understand this issue better. So after this long introduction, I have no choice but to introduce our two guests. First, I would like to introduce Dániel Nagy, and also Ádám István Retkes, who are external Cbdc advisors and the central at the Cbdc think tank Budapest. I have to say this is a new dynamic think tank with a strong international network. Dániel and Ádám are also experts at the Frankfurt-based Digital Euro Association, and in the recent years provided advice to numerous public and private financial institutions, also in Hungary and also abroad, especially with a special focus on the Western Balkan region. Over the past years, they made serious efforts also to popularize the issue in Hungarian media, and not to mention that they were several occasions a guest at the top Hungarian higher education institutions, especially the top Hungarian universities. Traditionally, when we invite guests into our events, we put a special attention on inviting from different organizations or different companies and so on. But this time I decided to make an exception. And the speakers have been dealing with financial aspects of digital currencies, but Dániel is more concerned with the political and especially the geopolitical aspects of their use, while Ádám's main research area is the technological issues related to digital currencies. So I think this comprehensive portfolio they can provide us is a very special one, and they can help us to have a broader picture and better understanding of the growing role of digital currencies. So before passing the floor to our speakers, I would like to quickly outline the agenda of our event today. First, I will ask our speakers to give their presentation in 15 to 20 minutes. Then this will be followed by my questions. And later, of course, I will pass the floor to the audience. I would like to ask the audience to raise their questions in writing the chat function of Zoom by clicking on the Q&A button. So please raise all your questions in the written form. So nothing remained, just to pass the opportunity to our guests today. And I would like to ask them to make their presentations. Guys, please, the floor is yours.
Great. Okay. Viktor, thank you very much. It's a great honor to be here today. So first of all, if you can hear me, I will share my screen and we would show you a short presentation about the global and Asian landscape of central bank digital currencies. Can you see the shared screen?
Yes, we can.
Okay, thank you, Viktor. Okay, so in the next 15 minutes, we will highlight what is the current situation about central bank digital currencies in the world, and we will focus on the cross-border side of them. First of all, we will highlight what is exactly central bank digital currency is, why is it so important, and what are the differences of this kind of new money to the existing form of public money and digital monies as well. In the final part, we will highlight some opportunities and risks as well. And later on, we can reflect on the geopolitical, economic, and technological sides. Now I will give the word to Ádám. Thank you.
Thank you, Dániel. So first of all, I would like to define what CBDC is and well, put it in a context in the financial terminus technicus. On the left side of the slide, you can see the so-called money flower taxonomy, which defines the different sorts of money based on 4 directions or 4 dimensions. The first one is if it is widely accessible or if it is limited to certain institutions. The second one is if the money is digital or if it is physical. The third one is if it is central bank issued or privately issued. And the last one is if the money is tokenized or value-based. So a central bank digital currency is basically a liability issued by a central bank in a digital form. That's the most important factor of the definition. On the taxonomy, you can find it in the middle, highlighted in the gray area. There are central bank accounts, central bank digital tokens, different kinds of these tokens. But also you can find bank deposits and cash and normal means of payment as well. But what we will focus about today is central bank digital currencies. So in the middle, you can see central bank digital tokens. They are general purpose digital tokens. It is a form of CBDC which can be accessed and used by the general public as a legal tender. So financial institutions, natural persons, and also businesses can access this form of money, central bank money, in a digital form. And the second one is central bank digital tokens, the wholesale one. It is a form of CBDC which can be accessed by a number of entities supervised by the central bank, like commercial banks, payment service providers, and some government agencies. So it has a limited usage. It can be used for interbank payments. And also we can find central bank accounts, the general purpose ones. These are accounts, regular bank accounts, but opened at the central bank of one's jurisdiction. We will talk about the tokenized forms of central bank money for the next few minutes and for the rest of the presentation and the roundtable discussion. So there are some technical considerations as well, like if a central bank digital currency should be centralized, like most of the payment market infrastructures of today, or should it be distributed like the private tokens, the cryptocurrencies? Also, if we consider introducing CBDC based on a distributed infrastructure, should we base it in blockchain technology, or should we base it in distributed ledger technology in general? Because blockchain is just a subpart of the whole distributed ledger technology direction. So these are questions to consider when implementing a CBDC. On the next slide, you can see a comparative map, and I will pass the word back to Dániel to talk about that.
Yes, so let's take a look at the global map of CBDC project. This map is provided by the Bank for International Settlements. It is updated regularly, and currently there are currently 86% of global central banks is in a kind of phase of researching or piloting central bank digital currencies. The exact data is that currently there are 3 live projects or 3 live rollouts, namely the Eastern Caribbean, the Bahamas, and also Nigeria in the recent past. And we are informed that Jamaica might be the next one of rolling out central bank digital currency. There are 28 pilots globally, so it's a big number. And in addition, about 86 central banks have communicated publicly that they are involved in some kind of form of central bank digital currency project. At first glance, you might think that the world looks even in this field, but we should highlight that Asia is a first mover in our opinion as well. And if you look at the right-hand side of the map, you can see that there are many projects taking place in Asia. You can see the red color from Russia through China to Australia as well in different project phases. But the most advanced projects are taking place in Southeastern Asia, it isn't on the map, but we would highlight the multiple CBDC bridge, which is abbreviated M-Bridge or MCBDC bridge. And in this project, this is a very advanced cross-border wholesale CBDC project. China, United Arab Emirates, Hong Kong, and Thailand are involved. And this project is in the third phase right now. On top of it, there is a so-called Dunbar project in which Singapore, Malaysia, Australia, and an African country, South Africa, are involved. We should mention that there is a cross-border retail CBDC project between Hong Kong and China as well. So based on the numbers or based on the just this data, we can emphasize that Asia, especially Southeast Asia, is a really first mover in this field. But Europe and also the US is dealing thoroughly with these questions as well. So let's jump onto the next slide and talk about why is technology so important and so special? Ádám, please.
Thank you, Dániel. So what I would like to mention here from a technological perspective is one of the most specific attributes of CBDCs that are built on distributed ledger technology, because distributed ledger technology enables digital money to be programmable by introducing the so-called smart contracts. Smart contracts are not those legally binding physical-like contracts that you usually sign in the presence of your lawyer. They are just like business processes that can be automatically executed if a certain set of requirements are fulfilled, which means that programmable money can be used without any manual intervention. That's the most important part. It is very different from the current correspondent banking system, where the shareable transaction message data is predefined and business actions take place queued after message processing. So whenever you initiate a transaction in the current correspondent banking system, you have to wait for the funds to arrive at the beneficiary, and after that the beneficiary can initiate another business action, like sending the shipment to your enterprise. So programmable money could be a very good game changer in international trade, where payments for the traded goods could be executed automatically without any manual intervention. Yes, why is it so important? Because there are a lot of frictions right now in the correspondent banking system. What are these frictions? From an illustrative example, you can see here that we have a payee and we have a payer. The payer wants to wire transfer funds to the payee, and the transaction has to go through a lot of intermediary banks. Of course, the payer has an originating bank and the payee has a receiving bank. But if they are located in different countries and their headquarters are in different jurisdictions, then the transaction has to be wired through a chain of intermediaries. Not to mention that the foreign exchange rates are unclear at the moment when the payer initiates the transaction, and also the payer doesn't really know what the final fee for the international transaction will be when the transaction gets initiated. Also, different jurisdictions have different operating hours, which means that one country that operates an RTGS system can have different opening hours than the initiating country's jurisdiction. Also, there are varying communication standards. And right now, most of the financial institutions of the world started to use ISO 20022 message format, which is an advanced message format. I should mention that. But not all of them use it at the moment, and there are communication standard differences which require then back office manual interventions, and that makes international transactions using the correspondent banking network very slow, very inefficient, and very expensive. Yes, but if we would introduce a CBDC that is capable of cross-border payment, then the benefits of such a payment system would mitigate most or all of the pain points or frictions that I just previously mentioned. So it can enable near real-time cross-border payment, which is unique. It can reduce the transaction cost from 50 to 80%, depending on the length of the correspondent banking chain that is not very needed anymore. It can operate 24/7, unlike the current real-time cross-settlement systems of the countries. It has the capability to execute direct interbank payments, so without any intermediaries, like I said, and it can eliminate data fragmentation problems by international cooperation. So these kind of CBDC systems have to be built together as a result of a big international cooperation initiative. Thank you, and I pass the word back to Dániel.
Okay. Before summing up, there are many opportunities and risks surrounding CBDCs. Based on our analysis, we found on top of that a digital proof monetary system could be created, that emerging countries, so-called global south, in contrast to the global north, could save up tens of millions of dollars in their domestic economies, or a noticeable amount of their GDPs could be saved up only from imports, inbound remittances, and these savings could remarkably improve their current account or so-called external balances. So this is one important opportunity which should be considered for emerging or every type of countries. The other one is that the control over the flow of domestic and foreign digital currencies could be established, since it's a new form of public money or programmed money, as Adam said. It has a new kind of logic which can be pre-programmed for special use cases, and it can be determined which digital currency or which other CBDC could enter the domestic jurisdiction of a country, and the cross-border capital flows could be predetermined or fine-tuned with these CBDCs. It should be also mentioned that since settlement and payments could be made more effective, then global trade could be enhanced with such solutions, and this kind of new money could revolutionize the whole international banking system as well. And one of our researches are focusing on this subject, and we think that it has an innovation side as well. So investments in innovation could be boosted with such a new ecosystem in which payments are made with these digital currencies. Financial assets could be tokenized as well, and different distributed ledger platforms could be connected as well. Also, we should mention that there are many risks which should be mitigated with careful planning. First of all, we must admit that there is cybersecurity and hacking risk. Also, there could be issues among interoperability, which means that how the legacy and this new kind of system can be connected with each other. Of course, application of distributed ledger technology is not proven yet in a live environment. So, and there are many governance questions as well. So, if 2 or 4 countries initiate such CBDC platforms, that they should carefully plan what are the privacy rules, what are the capital flow rules. So there are many questions regarding this topic, and they should analyze what's the impact to the monetary or the financial stability as well. So legal aspects coming up. So there are many risks which should be mitigated, but the opportunities might outweigh the cost. And to conclude our short introductory presentation, we believe and we do think that cross-border wholesale CBDCs can have a revolutionary impact on the global financial system, which could have ramifications to the global geopolitical, global affairs as well. And experimentation is key in this field. So to answer all the unanswered questions, countries should run experimentations. And for many emerging countries, we found that positive fiscal effects could be reached through increased trade and improving external balances. So thank you very much, and let's discuss Viktor's questions in the next round.
Thank you very much, Ádám and Dániel. This is really a deep and comprehensive introduction. So I've really learned a lot from it, and I hope the audience agree in this with me. Some of the papers I read on this topic argue that the central bank's digital currencies are seen as a challenge to the existing financial system. I don't know whether you agree with this statement or not, but first I would like to ask Ádám that what is the real challenge from a technological point of view? If I could understand well your presentation, central bank digital currency is a faster, cheaper, and even more reliable way to transfer money. But this is all about this, or I missed something, because why can't the correspondent banking system cannot keep pace with the central bank issued digital currency? So my first question would pointing into this direction, that what is the big novel? What is the innovation that the current international system cannot catch up with?
Thank you, Viktor. It's a very good question. The short answer is because of the legacy payment system. So right now, most of the payment systems operate their legacy infrastructures. They cannot be very well upgraded. They cannot be very well expanded. It is not module based, where you can put the pieces together and create a whole new payment ecosystem. So what is needed for the payment market infrastructure internationally is a next generation core banking system for international transactions. And this next generation system could be central bank digital currencies on a cross-border level. So like I mentioned, correspondent banking is slow, it is expensive, it is not transparent, it applies unclear foreign exchange conversion rates, it has limited operating hours, and it uses different message standards. You cannot overcome the problem of different message standards by just harmonizing some payment corridors in the world. So why is CBDC better than this? Because it can handle the previously mentioned frictions, because it is programmable and because it is interconnectable. Just to mention a few things, few specification parts of CBDCs. CBDCs could handle hundreds of thousands of transactions per second if a proper distributed ledger technology infrastructure is built behind it. A DLT network can lose up to 33% of its servers and even continue operating without any disturbance. So they are very resilient compared to today's centralized payment systems. And like Dániel mentioned, an entire ecosystem could be built up around CBDCs by merging security, settlement, and also international trade systems.
Thank you. You mentioned also that using digital currencies can reduce the transaction cost with 50 to 80%. I'm a layman, so can you give an estimation? How much does it cost? So can you assume that in a global scale, what could be the size of this sum? What are we talking about?
The aggregated the fees applied on the aggregated payment volume internationally could be around $160 billion internationally. But correct me, Dániel, if I'm wrong. So that's the volume of the fees applied for these transactions. Yeah, and half of them could be saved up.
I'm getting to understand it. Okay, thank you. My question I would like to raise to Dániel. When we checked your map, we could see that, and you also stated that Asia is the leader in digital currencies, central bank issue digital currencies. But we also could see the map, the developing countries are also pioneering central bank issued digital currencies. Why are the developing countries the leaders in CBDCs, issuing CBDCs? So how can this affect the, I have to say, very much Atlantic-centric financial system? Who can be the winners and who will be the losers if we accept this transformation?
Yeah, great question. First of all, based on our research, we found two key reasons to answer this question. There are external and domestic factors which define the evolutions of developing CBDCs. So a crisis is an important motivating factor to improve the current state of the infrastructures. Like the current war situation will cause tremendous changes in the coming future. So coming back to the question, we would think that the Asian financial crisis back in 1998 played a major role in this question, because due to the exuberance of foreign direct investments and loans, a huge bubble burst, and then the Asian countries found themselves without financial support. And then came the International Monetary Fund with restrictive or with tight financial conditions and provided loans to many developing and emerging countries. And then these Asian countries found themselves in a situation that huge volatile capital flows happened, and the foreign capital which was spurred into the countries just months before were spreading out. So these were really quick capital flows which they found that it would be better to better control those capital flows. So this was the first crisis which made them think that their system should be improved. The second one should be the great financial crisis back in 2008. So a similar situation happened, but China and Asia found themselves in a position that they are very much dependent on the U.S. monetary cycle, on the U.S. Monetary tightening of the Federal Reserve. So they thought that their dependence on the US dollar should be somehow decreased to achieve a more sustainable growth in the long run. So these two crises made a major part in their thinking. And back around 2010, China was almost the largest trading country of the world. So they raised the question to themselves that if we have the largest foreign trade in the world, then why couldn't we use renminbi to settle trades or pay in renminbi? So the internationalization efforts around renminbi appeared during that time. I forget to mention that after the Asian crisis, these Southeast Asian countries established many FX foreign exchange swap lines, and they started to initiate trades in local currencies. And these trades, after more than 20 years, are still underway. So it's a kind of natural evolution. And then after the great financial crisis, there was a new kind of money called Bitcoin or a crypto asset. And China just realized around 2013 that in some provinces there is a huge electricity usage, and the government just jumped onto that what's going on there. So what was the situation? And they found that many programmers mined Bitcoin, and they paid with it, and yeah, the government said that it should be stopped. And let's take a look at this technology. This is interesting. This is exciting, and they quickly realized that this distributed ledger technology, or we can say a blockchain behind Bitcoin, is fascinating, and they started research it back in 2014. So the Chinese central bank digital project is almost 8 years old. So the Western financial the Western countries started dealing with it just a couple of years. And the US just released its white paper around Cbdc. So there is a huge gap or lag between these countries. So China has a kind of history in this field. So this is this external crisis story around Southeast Asian countries. And there is a domestic story as well, a domestic narrative that as you might know, WeChat and Alipay control the 90% of the electronic paying market or the mobile phone paying market in China. And yeah, the government said that we want back the control to our domestic currency, the renminbi or the yuan. So yeah, they initiated this project, and they achieved that these firms should cooperate with the government. So there is domestic and external narrative, and there are other reasons as well that Asia found themselves in a position that they are totally de-risked by the correspondent banking systems, as Ádám mentioned, and they didn't want to catch up with SWIFT and correspondent banks. They thought that, oh wow, we have this brand new technology, so let's develop something new, something bigger, which can be used far beyond the current situation. So, and yeah, they have a kind of they might have an advantage in it. So it's a kind of so-called leapfrogging. So yeah, that's the answer behind the motives of Asia, as we think.
Thank you. You highlighted, of course, the positive side of the coin, but there are also skeptical voices, and these are quite loud as well. And not surprising, especially from Europe and the United States, as they are the major beneficiary of the current financial system. So what do you think? What could be the main barriers of using central banks issues digital currencies? I am asking it also in the terms of financial, but technological and political considerations as well. You just mentioned, for example, Dániel, that this is also about power. So, and we could experience in the recent years that the central government in China is putting control on the market. So how do you see these risks, and what could be the question marks regarding these digital currencies? So I'm asking both of you.
Can I start with them? Yeah. So
of course, go ahead.
Okay. So yeah, we can catch a divide between the so-called global north and global south, as I mentioned earlier. And yeah, global north include the US, Western Europe, some parts of Europe as well, Australia, Japan, and yeah, especially in the Atlantic side of the global north, raise the question that why do we need a central bank digital currency? So our payment system is functioning well. So why do we need an N+1 payment method to make payments? So that's the question we often get from the global north. Yeah, but we should say that there are many risks and hurdles behind it. But just shortly, we should separate between so-called retail and cross-border CBDCs, between domestic and cross-border usage. So there are many questions in this matrix. But first of all, in the case of a CBDC, people say that there is a risk of commercial bank disintermediation during or through bank runs. And with such CBDCs, we can go back to the one tiering banking system. So it's another risk. Yeah, the independence of monetary policy can be questioned with such a system. And there's a centralization risk of the state, that the state gets more power, and yeah, one of the biggest issues is the privacy. That if you use such a digital state money, what information should you provide before opening such a wallet or initiate a payment? And yeah, there is not a current, or there is not a best practice or one size fits all design for this question. So every country should plan for itself. But yeah, Adam, we get questions also in the cross-border arena as well. So can you highlight some of them?
Of course, and just to add one more thing for the retail or general purpose CBDC risks, of course, it entails a few risks that can be mitigated, but one of them is also from the technical perspective that DLT as a technology is not really proved its capabilities in live operation. We have some live projects with some countries, but it is not a it's not a worldwide known technology to be used for financial market operations. But the performance tests have very positive results, and analysts should consider DLT as an option when building up a CBDC for general purpose or for retail usage, but also on the wholesale usage. So when we're talking about interbank payments, the first question should arise if it is needed to change the current real-time gross settlement system, the centralized gross settlement system, to a CBDC in the domestic economy, in the domestic payment system. So there are very fast relation-based databases. From the IT side, it is feasible to upgrade to some extent the current systems and have them running for a few more years. It wouldn't be the most efficient one. Let me put it to you this way, but the cross-border wholesale CBDCs could have another kind of risks, mostly monetary risks. So like losing control of the money supply, or there are also interoperability challenges with legacy systems. But careful design considerations can mitigate the previously mentioned risks. International cooperation and standard setting initiatives are very important from this aspect. And therefore, the experimentation is needed. So central banks should run a lot of experiments by using different technology solutions and solution providers to find the optimal one to introduce a CBDC. And like I said, so far, the results look good. They prove that CBDCs could have their advantages in live operation, but the message being that no country should introduce CBDC without thorough analysis and double checking the performance tests.
Yeah, Viktor, I would still highlight another angle of this topic also. Yeah, we talk about currencies. So many experts and people raise the question, and there is a huge debate around this topic that will the Chinese renminbi or CBDCs dethrone the dominance of the US dollar? It's a natural question, and maybe you wanted to ask it too. The short answer is no. So CBDC alone won't be able to replace reserve currencies in their role, like the US dollar or the euro. But we identified a so-called powerful cocktail, which includes the elements of CBDCs as well, because it's a new technology, as we said earlier. So this new technology is able to make payments faster, cheaper, and more transparent. So why wouldn't entities like households and companies use it? So it's if it's better and cheaper and it's able to save up huge sums of money in your domestic economy. So why wouldn't you use it? There are privacy questions, of course, but they can be fine-tuned in the planning phase. The second thing is that the countries, for example, in Asia or in Southeast Asia, aren't just developing CBDCs. They are making huge progresses in their domestic capital market. So a deep and liquid capital market is also an element of long-term success in reserve currencies. And we see huge progresses in that, for example, China is developing its bond market, making its FX market more liquid. And yeah, there are issues around general trust and the legal system. And these are establishment which should be improved in the long run in the case of emerging economies. And the third one is that which is underlined by the current situation is the sanctions. So there is a huge political momentum right now around CBDCs, and right now we think that CBDCs wouldn't be enough to solve issues around banning the usage of SWIFT, but in the long run, in 5 or 10 years, it might be a solution. So countries might be motivated or have an extra pressure to improve their currency systems in order to avoid sanctions with US dollar.
Thank you. If I understand well, you both arguing that the whole financial landscape is shaken, and probably this is not visible from the West and especially from Europe, but in Asia that's an obvious issue. So my question would point to this direction: what can we learn from Asia? So you mentioned what are the beneficiary elements of using central bank issued digital currencies, but what can we learn from them? And Dániel, do we have to prepare for a digital euro? How do you see this?
Yeah, so under what can we learn? You mean Europe, not Hungary. Yeah.
Sorry, not Hungary. Europe. Europe.
Yes, Europe. Yeah, sure. A great topic. So right now there is this so-called digital euro project. So it's a 2-year researching and investigation phase around around the domestic usage of a digital euro. So there is a project which is undergoing currently, but European policymakers should think over that. What is our long-term strategic goal with the euro? Should it be just a regional payment method, or a regional currency which is used in the eurozone or maybe in some more European countries, or do we have greater ambitions in the international usage? We think the answer lies in the second option, and based on our research, we think that the cross-border wholesale digital currency, euro digital currency, could be used to make foreign trade more effective. So maybe billions of euros could be saved up from transaction costs, but it should be carefully calculated before saying anything. So euro in cross-border usage could be a beneficial option, and in the wholesale phase, in the wholesale version, we think that on top of digital euro currency, the whole financial asset ecosystem could be built in a wholesale CBDC system. So that's the other part. So we would say on top of domestic digital euro, a wholesale domestic euro and a cross-border wholesale digital euro would be necessary. But Adam, could you do you have some additional thoughts to it?
No, you summarized it really well. So my thoughts are the same. We should carefully look at the trading numbers and the remittance numbers, and build up cross-border payment systems or payment corridors with the most important trading partners of the European Union and the most important remittance partners.
And Adam, is there any technical barrier to join this digital race, or you don't see any serious issues?
I must admit that we should talk about some of these issues. They are not really barriers; they are rather challenges. Let me put it to you this way: it might be expensive to develop such a new system internationally, but it's only the capex side. So the operational expenses would be much less than in the current system. Also, message format harmonization is needed. That was why I talked about the international cooperation, just so that the different jurisdictions can have a communication channel with each other, and they can ensure that they can understand each other. Also, legal harmonization is needed. They are KYC and AML processes that need to be built in the payment system. So anti-money laundering and know your customer processes, they are quite different in each jurisdiction. They also have to be harmonized. Central banks then, if we checked all these checkboxes, then they also have to find an appropriate technology vendor. There are a few technology vendors right now in the world with, in my opinion, very great solutions and very great architectures. One information to that is currently there are more than 150,000 Ethereum developers on the world, which should be taken into consideration as one option when finding appropriate DLT solution to build in. So yes, there are some challenges, but they can be very easily overcome with careful planning.
Sorry, I will highlight another aspect of this digital euro project. So one opportunity we see that maybe Western Europe and the Balkan region could be connected with such a system. So Western Balkan countries have a huge remittance market, and they also have significant foreign trade with Western Europe, but also with Asia, and with each other, of course. So a cross-border wholesale CBDC system might provide some remedies to their pain points in cross-border payments. So because in their case, it's very expensive to send money back home. So inbound remittance. On the inbound remittance side, huge sums of money could be saved up in those Western Balkan countries.
Okay, and my last question, of course, is we have to also focus on Hungary. We are a small country, highly interconnected and integrated into the European economy. I'm assuming that we don't necessarily need a known central bank issued digital currency. But should we have a CBDC strategy? How do you see it?
Adam, you start or
Yeah, from the perspective of Hungary, of course, we should follow the path of the ECB, in my opinion. Researching the topic is very much needed. Experimentation is also needed, so we have to prepare our payment market infrastructure for the future. That goes without saying, and in the framework of these experimentations, we should also look at not just the domestic usage of CBDCs, but also the cross-border usage, like Dániel mentioned. It's numerous advantages. What Hungary should do is to adopt the best practices of the pilot projects and the live projects that are running right now in the world. Danny, if you have something to add.
No, you summed up it well. So yeah, the point is that innovative approach is necessary, and yeah, central bankers with programmers and geopolitical experts should work together in this regard and plan the best possible solution.
Okay, thank you very much, gentlemen. Of course, I would have several other questions, but I also have to give the floor to the audience. Before I read the first question, I would like to encourage everyone to use the Q&A chat function in Zoom and raise questions to the presenters. So the first question, if I may, is regarding the CBDC development between and channels between Hungary and China. So Wang Xiaoping asked the question. You can also check the chat function on Zoom. So what is the situation of CBDC development of Hungary? Any cooperation of cross-border CBDC between Hungary and China? So how do you see this situation?
You can start there.
Okay, thanks. The situation currently is the following. The Hungarian Central Bank published a very thorough analysis in the last months regarding CBDCs, mostly focusing on general purpose CBDCs. They are examining the topic. They are researching the topic of CBDCs. But that's all the public information that can be found regarding Hungary's participation in CBDC development and research.
Yeah, I would add one thing. Yeah, that's the point. There was this Singapore FinTech Festival last November, and it was made public that the National Bank of Hungary is an observer member of Project Dunbar, as I mentioned in the introductory presentation. So as you might remember, Project Dunbar is a cross-border wholesale project in which Singapore is the leading country, and then 3 other countries are taking part. So that's what we know about the MNBs or Magyar Nemzeti Banks endeavors.
My question also would point to this, that can you imagine that in the near future we will use in transborder transaction digital renminbi? And if you can imagine, make an example for us to understand the situation. what would be in practice the case of using digital renminbi? Who are the beneficiaries? What could be the amount of the transaction cost for a company? So can you make this more acceptable for those people who are interested in this kind of emerging and changing international landscape?
Yeah.
Go ahead, Ani. Go ahead. The floor is yours.
Yeah, I would have a question to Viktor. So, so you mean what would it entail to transact with digital renminbi, or so you mean that other countries would use in it during their trade, or
like in Hungary? So can you imagine that in the near future, Hungarian companies will use digital renminbi in transborder transactions to finance some trade activities or whatever? So do you think that this is coming in the next years? And what try to explain for those who can be part of this issue. Why is it useful to them? Why to use digital renminbi, for example, connected to this question raised by one of our someone from the audience?
Yeah, sure. Maybe it's a bit an abstract topic. So yeah, we should highlight the how is it exactly working. So we created a financial technology map about it, and this so-called fintech map is based on the Cbdc bridge report in which China is involved, and it is for cross-border payments. And we saw that between countries, payment corridors can be established, and the prerequisite of this payment corridor is to establish a domestic wholesale CBDC system. So it means that the transacting countries, in this example, China and Hungary, should have a wholesale CBDC system, and these can be connected via this payment channel, which is run on distributed ledger technology, let's say on Ethereum, and it's a closed corridor. To transact with CBDCs, there is a so-called depository receipt. Its abbreviation is DR, and DR is a claim on CBDC, and countries can transact with this mix of CBDC and DRs through this payment corridor. And the essence of the trade is that, as we found in our research, that the digital renminbi shouldn't enter the domestic jurisdiction of a country. So these digital currencies or digital tokens, this DR, can be traded with each other in this corridor, and then they will deliver the value of the trade and deliver the message to their bank in China or in Hungary. So that's the point we make, that digital renminbi shouldn't enter your country's jurisdiction. Trade can be executed in established payment corridors. Yeah.
From more practical approach, if you are a legal body, if you're a business owner or a natural person, and you would like to send some money to a Chinese beneficiary or a Chinese trading partner, then you naturally log into your bank application, and you wouldn't notice a change. You wouldn't notice a simple thing, because the changes would take place in the backend level. So what change you would notice is the transaction time, which would be reduced from multiple days to several seconds, and also the clear exchange rates, the the conversion next to the conversion rate, you would see the whole transaction cost in advance of the transaction, not after the transaction. No intermediary would be involved, and you could transfer your money 24/7. So that would be the difference between the current state and the next generation state.
I would highlight a last issue around it, and we get this question all the time when talking to international bodies, and it is the foreign exchange leg of the transaction, or the market making of commercial banks. And yeah, we believe that in such situations, the central banks, in this example, the National Bank of Hungary and the People's Bank of China, should step in to provide foreign exchange with narrow bid-ask spreads to execute the payments, because imagine there isn't a liquid market between Hungarian forint and Chinese renminbi. So and the commercial banks would do it very expensively. So yeah, for the public good, the central banks should step in and provide liquid foreign exchange markets.
Thank you. I'm still waiting for some other questions from the audience. Until this, I also have to ask this, that Dániel, you mentioned that crisis made a big pressure on issuing digital currencies. And now currently we are facing one of the most, I have to say, dramatic situation in the last years, especially in Europe, the Ukrainian crisis. So how do you see, is this crisis can be a further pressure on issuing digital currencies, or can this have any impact on central banks' decisions to introduce these new kind of tools?
Sure. So the short answer is yes. It's a new momentum in direction of developing CBDCs, but at the current moment there are many questions. So yeah, as far as we know, Russia is also running a CBDC project. So they have a retail CBDC project for domestic usage, and they mentioned that they would be interested in cross-border usage as well. So right now it might be a fiction because it wasn't written in articles, but I could imagine a time, I could imagine a future in some years' time that maybe, yeah, the Chinese and the Russian CBDC system will be connected. They will execute foreign payments there, and yeah, there is huge market in Central Asia as well. For example, Iran went through a similar situation like Russia now back in 2012, when they were also sanctioned and cut off from SWIFT. So yeah, these countries could have natural incentives to develop CBDCs, and yeah. That's all we can imagine right now, and let's see what the future brings. I don't know if I have answered your question, Viktor.
Yeah. I know it's a sensitive issue, and it's not easy to judge the situation from this point of view as well. Ádám, would you add anything else?
No, just to highlight what Dániel said, that Russia is at the moment in a very developed phase regarding its own settlement system, its own RTGS system that has been developed over the last years, and it's operating, but it's mostly operating by connecting together the domestic financial institutions of the Russian Federation and some foreign banks from a handful of countries. But yes, the current Ukrainian crisis made a huge momentum for digital currencies to rise. So yeah, that's that message for me.
Yeah, digital currencies, and the other point is that making payments in local currencies, so in the national currencies, circumventing US dollar based payment. So it's a huge momentum behind it.
And how do you see the prospects of joining the Russian and the Chinese system? Because that's also in the air. Many of the experts are discussing actively this issue. How do you see this?
You mean, Viktor, that right now should countries establish payment corridors with China or Russia, or?
Yeah, these issues are. Yeah, this one I would like to ask you, because one of the core issue in this regard from a political point of view in the next couple of months is how to continue importing gas from Russia, but at the same time finding alternative solutions to pay for the gas. And from this point of view, all these kind of innovations in this financial scheme could be interesting. So how do you see this? Is it possible to connect these I would say connect these independent or currently less connected systems to each other to providing new corridors for financial transactions?
It's a question of political decisions. So first of all, a long-term vision should be established, and political considerations should stand behind such a decision. But from a technical perspective and from global experiences, we can say that yes, such cross-border wholesale Cbdc systems can be applied for executing foreign trades. Yeah, currently in the case of energy imports. Yeah, sure, and I think Ádám could support that that there isn't any hurdles from technical perspective.
Exactly.
Okay, if there's no more question left, then I have nothing else but to thank to our speakers. This very much, I would say, eye-opening discussion. Gentlemen, I can promise one thing, that we will continue it in the future. So I hope you enjoyed it, and you will come back to discuss the further developments of this new and emerging field of the financial transactions. So I would like to also thank the audience of their participation and also their activity. And I would like to say also to please be part of our discussions and events organized by the Institute for Foreign Affairs and Trade in the future as well. And especially I would like to promote the Frontlights of Global Technology War series. And we can promise that this kind of interesting discussion will be continued in the near future as well. So please stay up to date with our webpage and our social media, and see you next time. So thank you again, all of you, and goodbye.